chat about lending and borrowing with Bitcoin, or Bitcoin as collateral. So using Bitcoin for lending and borrowing and other activities is, I think, a really exciting use case for it. And I'm really excited to have Mauricio from Ledin up here. I've known Ledin for a long time. Really great company in this space. So thanks for hopping up here. And I work at Trust Machines, which is building more Bitcoin DeFi-esque applications. So Mauricio, starting out, when we think about Bitcoin as collateral, why is Bitcoin such a good piece of collateral?
Oh man, so many ways to answer that question and so many reasons why. But I guess we'll start with the basics. So lenders, to get comfortable with a loan and to issue loans at increasingly better rates, you need to have high quality collateral. Example would be in the US, you can get mortgages. Well, they weren't so expensive not too long ago, but it's pretty easy to get a mortgage or a line of credit if you already own a house. It's pretty easy to get financing for a car, etc. And the US has a very clean personal credit system where you can borrow unsecured, and if you don't meet your obligations, you get dinged. That system does not exist, broadly speaking, in emerging countries. So places like Venezuela, where I'm from, there is no unsecured credit system. And so access to credit is very lacking. So going back to Bitcoin, until Bitcoin was created, there was no asset that a person in Venezuela or Colombia could post to a lender in Canada or the United States to get a dollar loan at a low rate. They were basically, the only available options to them was available in their local banks, and if they weren't rich or they didn't have assets, they just can't really get access to lending. With Bitcoin, this entire thing changed because now Ledin, a Canadian company, can basically issue a Bitcoin-backed loan to a Canadian in the same speed, at the same terms, and treat the client in the exact same way than a client in, say, Colombia. And even credit cards today, or real estate lenders or mortgage lenders, they all have allotments for loan losses, non-performing loans. Because liquidating these assets can be very difficult, like a house, a foreclosure process is very long. Bitcoin trades 24/7. It has very, very deep liquidity. It can be sold effectively at any time. It can be sold in fractions, and it can be sent around the world basically in real time. And this makes it, in my view, the world's best collateral as it exists today, because it lets you, it protects you as a lender, and it opens up financing options for you as a borrower. So, high level, I think those are some of the main reasons why it's such a great piece of collateral.
Yeah, I think Bitcoin is, when you think about how Bitcoin can move around the world in this very fluid manner, you have order books or exchanges all across the world where you can buy and sell Bitcoin. So if you're a lender, if you're taking someone's Bitcoin as collateral and you need to liquidate it, there's a ton of different venues all across all these countries where you could go liquidate that collateral if you needed to. Or if they needed to top up, they could easily, for example, in the United States, we have the wire system, but wires don't work on the weekends. So if you needed to post collateral on the weekend, you wouldn't be able to. Versus with Bitcoin, boom, you just zip it over there, and now you can post more collateral.
Yeah, and I think that brings up a good point, which is when you are borrowing against your collateral, any collateral, there's a risk. If that value of that collateral is volatile, there's the risk that you may have to add more collateral, or the risk that if you don't add up collateral in time, collateral has to be sold to close off the loan. So this is something that is very important to anybody that's borrowing against their Bitcoin, and it's something that, in our case, we as lenders take very seriously. And so we're constantly building features and options for people to have be safer with their loans, protect their collateral. We don't like closing a loan as much as some people don't like getting their Bitcoin sold. So an example of this would be, we just rolled up this feature called auto top-ups, which if you have assets or Bitcoin in your savings account and you have an open loan and the price of Bitcoin does a flash crash overnight for whatever reason, the system can automatically take Bitcoin from your savings to top up your loans. So it basically protects you from that flash crash. And yeah, I think, increasingly you're going to see more and more features like this that makes borrowing against your Bitcoin even safer and cheaper. We can talk about the trends on accessibility, because I think that's been a pretty big thing that we've noticed at Ledin, is how many doors this has opened for people outside of OECD countries.
Yeah.
Half of our loans go to Latin America.
Wow.
And there's a big reason for that. But you know, we can get into like the sort of evolution of the loans.
So for Ledin, you guys are truly global. Like your customer base is truly all over the world. And this opens up capital markets to people in Venezuela or, you know, what are some interesting countries that you've seen, you know, where your customers are from? Is it like heavily Argentina, Venezuela, or is it more highly populous South American states like Brazil or something?
So Brazil is interesting because Brazil was a pretty big chunk of loans. I would say 2 years ago or even maybe last year. This year, Brazil ironically has done, well, not ironically, but their economy has done really well. They have actually lower inflation than the U.S. They started raising rates before the Fed, and so they don't really have the same issue that Argentina has right now. So places where we've seen a lot of activity this year, no surprise, Argentina. Their inflation has been horrible this year. Colombia has suffered horrible inflation as well. In Chile, and obviously there's Venezuela and Mexico, which make up a big chunk of it.
So while we're not seeing Bitcoin used for payments, we are seeing it being used for collateral in these countries, because that was always the hypothesized use case. I got into the space a long time ago, and we thought that, you know, payments were the first way that you'd use Bitcoin, but Bitcoin as a store of value or as a piece of collateral actually seems like the number one way it's being used. I'd say there's probably a lot more customers doing that in Argentina or Venezuela than transacting even. This is just hypothetical. I don't actually have this information, but it seems like there's a lot of activity going on in that.
There definitely is, and I think that is for a plethora of reasons. Like the big one is a lot of people, even if they can get a loan locally, they don't trust their banks, and they just don't want to deal with their banks. We've even had clients that take out a loan from us, and they ask for the disbursement to be done in stablecoins or in Bitcoin. Because they don't even want the funds to hit their local bank accounts.
Wow.
And so there's real distrust there, and it's also because the banks have failed on them so many times. And if people in those countries had the choice to hold their assets with a Canadian entity or with a U.S. entity, they would take it. And we service everybody in Spanish. Like there's the treatment for a person in LATAM from legal agreements to the marketing website, to our educational material, all goes out in Spanish, Portuguese, and English. And I think that's a big reason that the platform resonated in that market, because a lot of people down there especially, they're getting into Bitcoin to flee inflation. It's a very stressful situation that you're trying to solve. The last thing you want is an agreement in a language you don't understand.
And what's great is that you guys are native Spanish speakers, because I've seen so many products in the United States, they're founded in San Francisco by English speakers, and then they'll get the app translated, but they don't really think about culturally how people interact with it. So that's really cool to hear that you guys have done that.
Yeah, and actually I think that's also one of the reasons why CeFi has made, I would argue, more inroads in terms of adoption in emerging markets than DeFi, because having the basic knowledge you need to even interact with with any DeFi element is very difficult. And especially when you leave OECD countries, money is a people thing. Like people are used to calling up their bankers. They want to have a personal relationship. They want somebody answering the questions. And they don't like to really self-serve as much, especially when it comes to their assets.
And Mauricio, before we get into, so that was really cool diving into where you're seeing your product get adopted, and it's really cool to see use cases for Bitcoin outside of Western developed countries like the United States or Europe, because that, I think, has a lot of impact on people in Argentina and countries where they really need it. Let's shift a little bit into some of what you guys are working on. And I think let's start with the basics, because a lot of people might not have taken out a loan against their Bitcoin or have lent out their Bitcoin to earn a yield. So starting with the basics, let's say I've got $100,000 worth of Bitcoin. How does this process look like? What does this look like?
So it's a pretty simple process. You just have to. We are a centralized entity, so you have to do KYC when you register at Ledin.
And they got to trust. Yeah, they have to trust Ledin, right?
Yeah. We do a lot of things that I'm happy to kind of talk through in more detail when there's a better venue. But we just appointed Deloitte as our external auditor. We do proof of reserve attestations every 6 months with a certified public accountant. We only support Bitcoin and USDC on the platform. And so the process, to go back to your question, is you sign up a let-in, and you can borrow up to half of the value of the Bitcoin. So if
All right, so send in $100,000 worth of Bitcoin, I can get $50,000.
Correct.
Okay.
You can get $50,000, and that will have a 7.9 interest rate.
Okay.
And it'll have a 2% admin fee.
And is that interest only, or is that principal as well?
So that is interest only.
Okay.
Our interest rates for the loans do not compound; they're just linear interest. You can repay them at any time. There is no prepayment penalty. There are no monthly payments you have to issue. All of the interest accumulates until you want to repay the loan.
Got it.
And if you want to take a lower LTV, so for the same $100,000, you could borrow $20,000.
Okay.
And it would cost you 2%.
Gotcha.
And so the more collateral relative to the amount you're borrowing, you're posting, the lower your interest rate becomes. And, and actually, we see that in North America, there's generally more appetite for the lower interest rate loans, even though they require more collateral, but because they have access to other sources of credit that are not always as high.
Now, okay, so where do I get in trouble here? So I borrow again. So one, I have to afford the interest rate, which depends on your status or whatever income you have. That could be a lot to service the debt. But what's the other way this can go south? We're going to talk about margin calls here.
Yeah, of course.
So I originally posted $100,000 worth of Bitcoin, but if Bitcoin goes up, we're fine.
Yes.
Everything's good. But if Bitcoin goes down, what happens then?
So we lend to you at 50% of the value you posted. That's how the standard loan starts. When the value of that collateral drops such that the value you borrowed is 70% of the current value of the collateral, our system sends you notifications to let you know, hey, Dan, you need to add more Bitcoin to this loan. At 75%, you get another email. And then if you haven't responded or didn't take action and the loan LTV reaches 80%, that's when the platform automatically takes action and sells the Bitcoin, close the loan.
So you get a couple warnings like, hey, it's getting close to your margin call. Then it liquidates your collateral to pay back the loan.
Correct. And now with the new auto top-up feature, basically the second the system would send the warning, it would detect that you've set up auto top-up, and it would just yank from your savings to your loan.
Now, do you all do partial collateral, like partial liquidations, or is it a full liquidation?
So the loan gets closed at 80% LTV, and so it doesn't sell off the entire collateral. You have 20% left of the collateral, approximately, give or take, based on where the sell price comes in. That amount gets sent back to your savings account.
Gotcha.
But yeah, it effectively closes the loan.
Gotcha. So nothing in life is free. You got to pay the interest rate, and if Bitcoin goes down, you could get margin called. So those are the two. This is a pretty cool idea, but just keep those two things in mind, I think, when you're considering doing this.
100%. And the one more thing is plan your stack. Like, assume that you will have to top up the loan, and keep Bitcoin aside such that you can top up the loan. The last thing you want is to need to top it up. And
to give people some clarity on like how much collateral you should post, I did this in 2020, and I looked at all historical drawdowns of Bitcoin, and I planned for going lower than that to survive that. That's how over collateralized my position was. So March 2020 happened, and thank God I had, because a lot of people got liquidated that day. I actually had a few pretty big Bitcoiners call me up, and they're like, "Hey Dan, can I borrow some Bitcoin from you? I'm about to get margin called." And I'm like, "Fuck no, no way." But those sort of moments. I mean, no one thought Bitcoin was going to drop 40% in one day. I mean, I've been around a long time, but I've never seen that. So plan for the worst and hope for the best. But that's my word of wisdom when it comes to these sort of loans. Is it's a great tool, but just understand how the tool works and where things can go wrong or right.
Yeah, and you mentioned we look at that data a lot. I personally am very invested in this process, and we always try to reduce it as much as we can. We have had clients that have had their loans closed at let-in for market conditions, etc. And the funny thing is, 80% of the people who have a loan closed by the platform come back to
Wow.
borrow again. And I think they don't start big. The behavior you see is people take a $500 loan first. They get a feel for it.
Okay.
And then when they get comfortable, they'll come back for a bigger loan.
That's a smart strategy, though, too.
Yeah.
I think with any investment, just dip your toes in the water and try it out. Understand the levers that you're playing with, and then when you feel comfortable, then make the decision.
I think, and that was a huge part, now that we brought up the point on the $500 loan, I think that was a huge key to us unlocking a lot of the Latin American market, because most people had a loan starting at $10K.
Okay.
Meaning you needed to post $20,000 worth of collateral to test the product.
Gotcha.
You can buy a house with $20,000 in most places in LATAM. And so it's very hard for people to give a taste and not feel like they're risking an exorbitant amount.
And I think this is a good segue to some of the new stuff Ledin is working on. So you guys are trying to think through different ways to earn interest and different ways to lower that borrow rate. So what are some of these new products that you guys are working on?
Yeah, so the one we announced last year was the Bitcoin mortgage, which we saw that a lot of people, several of our clients in North America, were taking out these massive loans, and basically they were telling us outright that they were going to go buy a house and that they were going to try to get financing from the bank, and then they were going to do a big partial repayment of their loan.
So they buy the house, they borrow against their Bitcoin, they buy the house all cash.
Yes.
Then they do a HELOC, like a home equity line of credit, and then pay you back.
No, well, that was the initial plan they had. But when they went to the bank, they said, okay, great, you're a Bitcoiner, show me your income. And they said, well, I don't have a bank statement, I get paid in Bitcoin. And they said, well, we can't lend you any money.
I actually went through this myself. So I was looking at buying a place in Austin, Texas, where I currently live. And I went to the bank, and this was my first time trying to get a mortgage, and I'm like, and I make a good amount of money in income. And I show them that, and then I show them what I want to buy, and they're like, well, we can't underwrite this for you. And I'm like, what do you mean? I'm like, here's my brokerage account, my bank account, and here's, I have more assets than the entire value of the mortgage. And they're like, we don't care. We just want to see what your W-2 income is. W-2 income in America means like kind of like an employer income. And all we want to do is see the stability of that income over a couple-year period. And they don't care at all about how many assets you have. You could have $100 million and they don't care.
Yeah.
So I went through this myself. It was
This reminds me when we were basically getting to start Ledin, we had a big mining facility and a bunch of our friends did as well, and they kept telling us they didn't have any luck getting loans in any kind of format or flavor, and when we started trying to get out and get a loan for our facility, the answer that I remember distinctly, because it was said to us so many times, was Bitcoin is not an asset. Bitcoin is not an asset. We don't support that here. We can't lend against it. And I thought, at the time, I thought that was so short-sighted and idiotic, to the point where it was like it lit this fire to solve our own problem. And today the banks largely ignore this, and it continues to provide a huge window for us.
even in ultra high net worth boutique banks, which my dad actually works at one, and I go, hey, I could, what we could do is I know a custodian, and they're willing to hold Bitcoin for you, and they have a trading desk, so we can set the margin call. All you have to do is we would just write up a tri-party agreement, and you wire me the dollars. And this is an ultra high net worth sort of boutique bank in Texas, and they're like, and then my dad's a managing director there, and they're like, no, we can't do that. And I'm like, well, they're just like, we know it makes sense. It's easy money. We have no risk, but we just don't want to touch crypto right now. And it's bizarre. Honestly, it's just bizarre.
And another thing to bring up, I think, as we think about or talk about Bitcoin as collateral is Bitcoin as collateral in yield operations. So, for example, the other side of the Bitcoin-backed loan is the dollars that we lend to the borrowers. Those dollars, go out at 7.9%, someone's providing those dollars on
Yes.
the other side.
You're borrowing dollars from someone else, a bank or someone.
No, we use actually the primary source of funding is our own USDC savings account.
Oh,
so
cool.
clients at Ledden can earn interest on their digital dollars, their USDC. That we pay 8%, and then we basically take those dollars and lend them out to the Bitcoiners.
Okay, so it's kind of a closed loop.
Correct. And so we need to have that ability and that security of that collateral to protect the dollar lenders. And now, interestingly, as you know, there was this huge disaster in the lending markets
With Celsius, Three Arrows Capital, a lot of stuff blew up.
Correct, and we were unscratched. Ledden didn't lose a penny or a Satoshi during this whole ordeal, which we're very proud of. But if you look at the main players that had major loan losses and had to take, either emergency funding or file for bankruptcy, etc., a lot of these loans were collateralized. But they were not collateralized with Bitcoin. They were collateralized with things like GBTC that could not trade on the weekends. They were collateralized with things like Bitcoin mining equipment.
So really poor collateral.
Correct.
Yeah.
The loans that were backed by Bitcoin, basically most of them were unscratched because Bitcoin can trade 24/7. We just went through it at the beginning.
Yeah.
Anybody that had Bitcoin as collateral largely walked out unscratched. Anybody that took all this exotic collateral that was quasi-Bitcoin or Bitcoin-related didn't do so well.
So you guys had a little bit more conservative underwriting, where you only accepted certain forms of collateral. To me, it seems crazy to accept Bitcoin miners as collateral. I mean, that seems insane, personally.
I think if you can underwrite it in a certain way that gets you more comfort. But the problem was you were underwriting rigs that were being bought at the peak of the market at like crazy markups. And so you were buying S19s for like, I don't know, $8,000 or something absurd. And then the lender was taking, call it 60, 70% of that price. And if you've ever run a mining facility and you try to sell equipment when things are tough, like you're going to get pennies on the dollar.
Totally.
And that was a big mistake. I think one that a lot of people are correcting right now.
So this has been a really fun journey on the CFI side of things, so centralized finance, where a lot of the risk there is trusting your counterparty. It's trusting Ledden, it's trusting another entity who have your Bitcoin to hold it and make sure that they deal, do proper things with it when it comes to lending and borrowing. On the other side of the table, kind of a new emerging thing is DeFi.
Yes.
And so with DeFi, you don't have counterparty risk, but you have protocol risk, which I think in the last 24 hours we had 3 hacks of DeFi protocols.
Yeah.
Now, however, I'm a Bitcoiner who's a little bit more open-minded, where I think there's a place for both. I think both products serve a need, and DeFi is certainly interesting, where you can borrow in a way that has different trust parameters.
Yeah, and I think actually now that you bring that up, I think the work that you guys are doing on trust machines with like things like, well, I don't know if it's not you guys directly, but Zest, which is being built like on some Bitcoin DeFi rails, is a system that helps companies like Ledden, or can help companies like Ledden, because it matches borrowers with lenders, and it gives the lender a sort of an inside view as how the assets are being used, and they're doing a little bit of this first screening of the borrowers that come onto the platform, and it becomes a bit of a marketplace. So there are CFI lenders that can interact with DeFi applications as well.
Totally. And again, there's different trust parameters and risk parameters here. Not every piece of DeFi is broken inherently, and not everything in CFI is great either. There's always these different, it's a nuanced argument. But with Zest, which is one of our first products, what's kind of cool is that in the Celsius Three Arrows Capital meltdown, the problem was Three Arrows Capital had posted collateral across multiple lenders and had been like, hey, we have this collateral, but it wasn't Bitcoin collateral, it was like GBTC collateral, and they repledged the collateral. So each lender thought they were giving them dollars against collateral they thought were uniquely their own. And so Zest solves some of those problems, where Zest isn't, I would say, completely decentralized. I would say it's trust minimized, where there's a lot of parameters in the underwriting process that, if it was transparent, probably would have led to a much less chaotic market scenario. So with Zest, for example, you might have Ledin on one side, and you might have a pool of collateral that Ledin can borrow. So this pool of lenders would put together like Bitcoin, and this could be everyday folks, or it could be institutional, and Ledin could borrow that Bitcoin from them, or vice versa. And then there's a third party, which is the underwriter. And so there's a really cool process here around the transparency of who's borrowing what from whom, and then at what terms, and there's a transparent underwriting process. And all of that exists in a, on the Bitcoin blockchain in some fashion. I don't want to get too technical because we only have 5 more minutes left, but it exists on the Bitcoin blockchain in some fashion. So it's kind of a fun intersection between CeFi and DeFi, where it's a gradient in between that I think would have probably led to the whole meltdown being a little bit less serious.
It would have certainly helped if you could see who. So if we look at it from Ledin's vantage point and we're lending to an institutional borrower, the more we can see what that borrower is doing, what positions they have, what's the collateral, who are they facing, what are the risks, it makes our underwriting a lot stronger. And I think a lot of people have this sort of, debate between what role will CeFi play versus what role will DeFi play. And the way I like to think about this is so DeFi is like uniquely set up to do short-term programmatic lending. So any loan that's a week or less in duration can be done better by a computer than by a human, right? Like a centralized entity is when you think about the main use cases that people borrow from Ledin for, is they have visibility on the interest rate, they have a big term, they have 12 months, and for things like buying a house, they have a 2-year term. Everything in DeFi is variable because it has to be.
Yeah.
And that is very well suited for short-term activity, but when you try to take I'm one of the unfortunate people that has a variable mortgage in Canada. And that is obviously, if I could go back in time, I would definitely go fixed. But that's the kind of experience that you don't necessarily want to get locked into variable rates for a very long term.
Right.
Because there's a lot of unpredictability there that sometimes the best, you can assess it as best as you can, but a black swan will happen.
Well, no one can predict where the interest rates are going to go tomorrow. So, yeah.
Yeah, maybe JPOW.
Maybe JPOW. Well, yeah, we'll definitely see on the Thursday. Tomorrow's a CPI print. That'll be a big moment of seeing if inflation has cooled off or it's still going, and that will very much dictate how much they hike rates, which will dictate all of our interest rates. To kind of wrap up on the DeFi side, yeah, there's definitely a lot of interesting things despite all the hacks, because centralized companies do fail too. We had the Celsius and 3 Arrows and all these other companies blow up. So it's different risk parameters is how I think through it. Is there anything that you guys have in the future that intersects the both? I don't think we had talked about this before at all, but is there anything?
So not at the moment. Nothing that's like in the immediate pipeline for sort of more connections with DeFi. In fact, transparently, Ledin does not expose any client assets to any DeFi protocols. Gotcha. So we don't generate our yield through DeFi protocols. It's a part of the industry that we pay very close attention to because there's a lot of opportunity there that is shifting with the risk. But we remain very conservative with how we generate the yield for our clients. And so it's, again, a place that we look at a lot for inspiration or potential partners. Like we do, a service like Maple, again, that connects borrowers and lenders, that gives us visibility on whatever.
And Maple, by the way, is Zest, but for Solana and Ethereum. Just to give people context.
Yeah, and really it's more so than the protocol that it's built on. You can think of it as a sort of X-ray into the books of a particular entity. So if you log onto this platform, you'll see that they have a loan against X bank or X entity, and they have this much collateral posted and matures on this date. And that makes it easier because sometimes you want to even cross-check that with the financial statements that you get from these lenders. And ironically, financial statements was something that 3 Arrows never provided to basically anybody. And so it's crazy, to your point, that there was no way of verifying if what they were telling you was true.
Yeah, even if they had showed you financial statements,
right,
you'd have to trust that they were true.
Right. And they had, there's that letter that goes around with the signature, like, yes, we have the money.
Did they really do that? Did they handwrite on there?
We didn't see the letter because they didn't get through the press. When we asked them for statements and they didn't provide them, that was it. That was the end of the discussion. But to some people, and there were some. You could tell that there was a bit of frustration because they kept trying to do it, and they kept saying we were the only lender that wasn't lending it to them, and it was just because our team couldn't get comfortable, and it ended up being obviously the greatest decision in hindsight.
I heard a story too that at another one of these lenders, they had Three Arrows had actually posted enough collateral to meet, it had posted an over collateralized position, and through the grapevine, I'm not going to mention which one it was. But I heard that the CEO, when it hit their margin call, he said, "You know what? I trust these guys. Let's just see how it plays out." And then of course, the collateral kept going down, and so that's where they actually had a hole. Was they didn't follow their own lending practices?
Yeah.
It sounds like you guys have a pretty tight shop in terms of like, we will never make an exception here. This is like That's why
the system liquidates loans, and that's why it's not just a person's loan. It's you can be Three Arrows, you can be Mauricio, you can be Dan Hell. Like your loan is getting closed.
Yeah,
and that's how we keep the business afloat. And so, take no chances.
Now, Mauricio, is there any one last word of wisdom you want to give people, or any highlight on the next Let-In product coming out?
I think I think there are great options out there to earn interest on your Bitcoin and your USDC, and I think right now there's a bit of naturally a bit of nervousness around some of these offerings because they want to paint all the apples as what just happened. But I could say not all lenders are created equal. If I could just say one last nugget is do your homework, do your research, and ask the tough questions, and do not interact with the platform until you're satisfied with how they're answering those questions.
Appreciate that final thought. And for me, if you're curious about Bitcoin DeFi stuff, I've got a bunch of writing on it. Also, check out Trust Machines. I work there with Munib and Aubrey Strobel. We're working on a lot of really cool DeFi-esque applications, so definitely recommend that you check those out. Thank you, everyone, for coming. This was a great panel, or a great presentation. Really appreciated chatting with you. Hope you found value in it, and thank you.
Thank you.
Two of the nicest guys.
Welcome back to the Bitcoin Magazine Analyst Desk, brought to you by BitGo. We are live at Bitcoin Amsterdam, and I'm joined by CK Snarks and George McHale. Gentlemen, welcome to the stage. We are definitely triggering TSA, the three of us all on one panel together. But here we are. We just heard about using Bitcoin as collateral. We spent a good chunk of today hearing about different ways Bitcoin is being used now as a medium of exchange. Now we're even having conversations about Bitcoin being used as collateral. What are your guys' thoughts? How do you guys feel?
So, we are moving from a world with maximum trust to a world where trust is deteriorating. You can see it everywhere. It doesn't take a rocket scientist. And Bitcoin is perfect for that environment. And Bitcoin is actually a foundation in which we can rebuild trust. So I'm very bullish, and I thought the panel was absolutely excellent.
Yeah, when you talk about trust, you talk about a lender lending out their money, and they no longer have to worry about your FICO score or how much money you have in the bank. All they need is you to put up your Bitcoin as collateral, and they're safe. So it's completely changing the way that lenders analyze risk, which I think is massive and totally underappreciated, right? So far, we've talked about Bitcoin as a medium of exchange, as a unit of account, right? All the different ways of using it as money. But as collateral, the conversation is just getting started. So really exciting to hear from the CEO of Let-In, as well as Dan Held, about where that's really going.
No, absolutely. Look, we've not forgotten about the store of value concept of Bitcoin. We all, at the end of the day, still hold our Bitcoin and hodl for as long as possible. But I love what you said, CK, about just Bitcoin being trust for this trustless society that we find ourselves in. George, how do you think sort of these risk appetites and the risk analysis being done for these lenders, what is the next step for them to learn more?
Well, if you think about right now, if you go borrow money from a bank, what are they going to ask you for? How much money is in your bank account? That doesn't really make them feel, it makes them feel better, but it doesn't really give them any sort of security if you think about it. You walk away, you could take that money out of your bank that you just verified was in there, right? So it doesn't give them any sort of peace of mind. Whereas with Bitcoin as collateral, they can actually monitor where your Bitcoin is on the blockchain in real time. So there's just so much cutting edge technology happening on Bitcoin lending. So it's going to be really cool to see it continue to evolve.
All lenders out there, be sure to be tuning into all of these talks. Make sure to like and subscribe down below. We'll be back after this next panel talking about replacing DeFi and all those shitcoins with Bitcoin.